Hello and welcome to this year's Industrial Distribution Big 50 Countdown. I'm Anna Wells, Executive Editor of ID, and I'm joined by my colleagues today, ID's Managing Editor Mike Hockett, as well as ID Contributing Editor and founder of the Big 50 list, Jack Keough. Today we'll walk you through the list of the largest MRO distributors based on fiscal year 2014 revenue. All Big 50 companies are ranked according to total worldwide sales, and all figures are reported in US dollars. We'll kick off with 50 and take you all the way to number 1, with some commentary along the way from our expert editorial panel.
Starting at number 50, we see the dollar amount entry point for distributors increasing dramatically. The minimum ante for this year's list is a whopping $143 million in sales, and it's met by a newcomer, CBT Company, which began nearly a century ago as Cincinnati Belting. CBT cites market growth over all business segments including automation, electrical supplies, mechanical power transmission, belting, and conveyor components and services. Our number 49 company is Perry Supply, with $151 million in sales. The company, which placed at number 47 on last year's list, saw a very slight dip from $153 million in 2013. Following Perry is IBT Inc. with $160 million in sales.
Flint, Michigan-based Shively Brothers makes the list again this year, bringing home $163 million in sales. Shively says it has continued growth in large account metalworking commodity management programs and started a new division, Shively Supply, which provides value-added services like vending and e-commerce to its mid-sized customers. At 46, Valen Corporation cites several acquisitions as contributing to its market positions, including those of Heat Tracing Specialties West Incorporated and DBA E&M Sales Incorporated. Since then, Valen has acquired the assets of 2 California companies.
Our number 45 company is Womack Machine Supply, posting a healthy rise from $172 million in 2013 to $185 million in 2014. Greensboro, North Carolina-based Tencarva also grew by $10 million, in fact, bringing it to the number 44 position on this year's list.
At number 43, we have Columbus, Ohio-based Kimball Midwest with sales of $214 million. In the course of a year, Kimball Midwest has welcomed a 4th Green Distribution Center and office in Savannah, Georgia, and expanded their headquarters in Columbus, Ohio.
With $250 million in sales, our 42 company is Ohio Transmission. Ohio Transmission acquired Advanced Industrial Products in March of 2014 and Olheiser Corporation in December of 2014. It posts a sizable gain from its 2013 number of $206 million.
At number 41, Hydrodyne, an ISO 9001 and ISO 14001 certified company, is one of North America's largest motion control repair, service, and distribution companies. Says Hydrodyne, "We provide components, systems, in-house, and on-site repair in a quick turnaround environment at each of our 32 branches located throughout the southeastern and southwestern United States. We have a proven track record of 47 years serving thousands of customers."
And wrapping up the bottom 10, Hisco takes our number 40 slot with $275 million. Hisco recently launched a new website featuring fully transactional capabilities, including real-time inventory, pricing, and online chat customer support. Totally redesigned and optimized for enhanced navigation, the new Hisco.com also automatically recognizes smartphones or tablets for the best possible and most user-friendly presentation. So Jack, Hisco isn't the only company, obviously, that's placing increased emphasis on their website. It seems that distributors of all sizes are being pressured to not only improve things like user experience, but also functionality, especially in the wake of the announcement from Amazon Business that they were entering the marketplace with an e-marketplace. So how do you think Amazon Business will impact distributors of all sizes, not just the large, but also the small as well?
I think what it means is that distributors are going to have to take a look at their own e-commerce site, improve it, and really compete against Amazon on what they do best. That is providing value-added services to products they sell. It doesn't matter anymore if you have the products. What you do have to provide is the solution for its customers. That's where you can beat Amazon. But make no mistake about it, Amazon Business has opened the eyes for a lot of distributors.
Moving into the 30s, we have Lawson Products with $286 million in 2014 sales. Over the last year, Lawson Products has added more than 6,000 new products in the electrical, automotive, material handling, and safety categories. In addition, Lawson has grown its sales team to more than 900 sales reps. At 38, We have Essex Brownell, an international distributor of wire and cable, electrical installation, and other critical components and fabrication services essential to the electrical OEM and repair markets. The Fort Wayne, Indiana-based company has reported $300 million in sales.
At 37, RS Hughes says the company continues to provide solutions to its almost 50,000 active customers in the US and Mexico, and is also posting strong year-over-year sales growth in its Mexico, Midwest, and Northeast regions. The company also updated its e-commerce capabilities in 2014 and introduced the Pass program with a suite of solutions consisting of Quick List, Purchasing Manager, S2S, and Vend to Supply, designed to simplify the procurement activities of its customers.
Our number 36 company is Canadian distributor Wajax with $310 million in annual sales. At number 35, Production Tool Supply says it continues to upgrade and enhance its websites to accommodate various customer needs. Additionally, says PTS, we have expanded our crib-managed inventory systems and capabilities to service our customers' unique problems and requirements.
FCX Performance is our number 34 company, jumping more than $100 million in sales and 6 spots from last year. The company completed the acquisition of Pump Energy Incorporated and Corrosion Fluid Products Corporation in fiscal 2014. At 33, we have DGI Supply at $334 million, with our number 32 company, Gas and Supply, holding the same position as last year, but with a $34 million jump in sales.
Number 31 is Baton Rouge-based AWC with sales of $360 million. Sales growth was solid in 2014 due to strong end markets, said the company, but 2015 will be more challenging due to the decline in oil prices and the higher US dollar. AWC's focus is on market share growth to offset the negative impact of weaker markets and to accelerate growth as markets improve.
Our number 30 company, Huey Group, is a minority-owned group of companies which, according to its CEO, has developed a unique commodity management enterprise globally with the help of manufacturers for the last 30 years within the Fortune 100 customers. Huey Group has developed MBEMROcatalog.com, which is the minority-owned supplier online marketplace for MRO supplies.
At number 29, we see a steady climb for Blackhawk Industrial, a company built on acquisitions. Staying true to form, 2014 acquisitions included the asset buy of Marshall Tool in Salt Lake City, a newly opened location in Portland, Oregon, to expand the Blackhawk footprint. So far in 2015, Blackhawk boasts 5 acquisitions, including Packaging Inc., Pioneer Tool Supply, Cataleap, Pioneer Precision Grinding, and Jarvis Supply. So no year in review would be complete without discussing consolidation. Experts have been beating the drum about this for years now, and I'm just curious your thoughts on whether we're kind of living up to the hype here and if this rapid level of consolidation is sustainable for the next few years.
I think it is. In fact, last year was the biggest mergers and acquisition activity that we've seen in some time. In fact, for many years. You're going to see more of it. In particular, I think you're going to find acquisition activity among the top 50. This has been a unique experience. Usually some of the small and mid-sized distributors have been acquired, but now we're seeing the thirst to expand market share by companies buying other large distributors. If you take a look at some of the things we've seen just in the past few months, it's pretty obvious that M&A activity is going to pick up steam. And that's not from what I'm just saying that, but if you take a look at some of the transcripts of the earnings call from CEOs and some of the major corporations in our industry, every one of them is predicting a sharp pickup in mergers and acquisitions activity.
So what about valuations? Are they going to stay as high as they've been?
Well, that's interesting because if you noticed about a year or so ago, we had a couple of CEOs say that the valuations were too high and that they'd have to come down before they really decided on whether to acquire other companies. In fact, Annixter, as you remember, was supposedly going to sell their business to possibly Rexel. The deal didn't go through because of the valuations. But what we're going to see happen now is that those prices are coming down, particularly in light of what's happening in the economy with the oil and gas sectors, etc. I think you're going to see a sharp pickup in that area.
At number 28, Van Meter says it offers best-in-class fulfillment rates, same-day delivery and technical expertise, all aimed at improving the customer's bottom line. Van Meter has more than 425 employee owners across 14 locations in Iowa, 3 which are LEED certified. Founded in 1928, the company is 100% employee-owned and reported $470 million in 2014 sales.
Our number 27 company, New Jersey-based Turtle & Hughes, reports $560 million in sales. This year, Turtle & Hughes Integrated Supply has experienced robust growth and for the third consecutive year has posted a 35% year-over-year compounded growth rate. The division has expanded both organically and with the addition of new customers and entered new international markets.
Our number 26 company, Bussard, had $618 million in 2014 sales. According to its 2014 annual report, Bussard sales increased by 2% to a record high, with operating margin increasing to 11.8%. The company says its market position in the field of high-quality engineered products and branded products has strengthened. We're halfway through the list. Stay tuned for the top 25 after a word from our sponsors.
Welcome to the world of innovation, where Epicor inspires distribution customers to think anew about business. Our software solutions allow you to efficiently procure goods and fulfill orders so that you deliver products when, where, and how your customers want them, connecting people and processes across your entire supply chain by helping you automate your competitive edge. Epicor, where inspired minds inspire business, and inspired businesses inspire the world.
At number 25, BDI cites expansion in Washington, Oregon, California, Texas, Oklahoma, Missouri, Virginia, and Delaware as relevant to its $690 million number. Also of note, the One BDI SAP system is now operating successfully in 6 countries in Europe, and Canada, BDI USA, and BDI Mexico will roll out SAP in 2016.
Our number 24 company is United Distribution Group of Bristol, Tennessee, with EIS Incorporated coming in at number 23. Atlanta-based EIS says acquisitions made a large contribution to a sales increase of 30% in 2014.
At 22, FW Web reported sales of $910 million and wraps up the millionaires portion of our list. Now on to the billionaires. At number 21, Command Industrial Technologies posted $1.16 billion in sales, a 12% increase compared to 2013. 2014 was an important year for our distribution segment as we continued to build momentum, said Neil Keating, President, Chairman, and CEO of the Command Corp.
At number 20, DXP Enterprises cited 2 key acquisitions in 2014, including Machinery Tooling and Supply and B27 LLC, and posted a sales boost from $1.2 billion on our 2013 list to $1.5 billion a year later.
Our number 19 company is Interline Brands, a Jacksonville, Florida-based distributor who recently made news when it was acquired by Home Depot for a price of $1.63 billion. Jack, any thoughts on the recent buy from Home Depot?
Well, a couple of things. First of all, I think it was shocking the price, and second of all, that it was Home Depot that made the purchase. I don't think anybody saw that coming, and it really makes you wonder just what's going to happen next. Could some other big companies like that get involved into the distribution sector rather than just the retail? Could happen.
Sure.
Edgen Group takes our number 18 slot with just over $2 billion in sales. According to Edgen, quote, "We manage procurement, value-added services, and delivery of high-performance plate, sections, pipe, fittings, flanges, valves, and OCTG through a global distribution platform across the Americas, Europe, Middle East, and Asia-Pacific regions." Edgen is a subsidiary of Sumitomo Corporation.
At 17, Eriks, owner of Louis Getz, completed 2 acquisitions, Magtechnik, headquartered in Switzerland, and Advanced Sealing, headquartered in California. Our number 16 company, Applied Industrial Technologies, was also on the acquisition trail, specifically for companies that support its customers in the upstream oil and gas market. Several sizable acquisitions in the past year include Texas Oil Patch Services, Reliance Industrial Products, Knox Oilfield Supply, and IRA Pump and Supply.
Our number 15 company, Win Wholesale, opened 7 new locations in 2014 and experienced double-digit growth in the low teens during the year. At 14, MSC Industrial Supply also showed marked growth, with a sales result of $2.78 billion compared to $2.46 billion in 2013. According to MSC, the company continued executing against and investing in significant growth plans by strengthening their talent and leadership-based product offering and infrastructure. Notable announcements include the opening of a new customer fulfillment center in Columbus, Ohio, to address the needs of its expanding metalworking and MRO customer base. The company also announced enhancements to its AccuPro portfolio of high-performance metalworking products, as well as its Hertel line. MSC launched its Control Point inventory management solution in June of 2014.
Our number 13th company is Decor & Cabal SA, parent company of well-known outfits like Dillon Supply and BMG Metals. At number 12, we see Fastenal, up to $3.7 billion in sales from $3.3 billion the prior year. The company continues to add staff and vending machines, and recently announced that CEO Lee Hine would be stepping into a COO role, and former CEO Will Overton would return to the helm.
Since spinning off from National Oilwell Varco in June 2014, number 11 company Distribution Now has expanded its locations in the US, Canada, UK, Norway, Australia, Middle East, and Africa. With our expansions, we have expanded our product lines and customer base in the area of electrical equipment and cabling, valves and actuation, pipes, fittings and flanges, and pumps servicing the oil and gas markets, says the company. In addition, we have expanded our machine tools and manufacturing supply business servicing the industrial manufacturing, aerospace, and vending market. Before we dig into the top 10, we'll break for a quick word from our sponsor. Don't go anywhere.
Does this complex, interconnected environment look familiar? Understanding a distributor's business is the most important thing we do. With more than 30 years delivering solutions specifically for distributors, Infor is changing the way distribution is done. With innovative social, mobile, analytics, and cloud solutions, distributors can increase demand, eliminate operational leaks, and pump up gross margins with advanced inventory management, streamlined rebate processing, and better pricing controls. Take a fresh look at modernizing and automating your distribution enterprise with Infor.
Number 10 on this year's list is Motion Industries, who has gained steadily from $4.5 billion in 2013 to $4.77 billion a year later. In late 2014, longtime chairman Bill Stevens gave notice of his March 2015 retirement. Former president and COO Tim Breen has since taken the reins for the company.
At number 9, Airgas has posted sales of just over $5 billion. On paper, this looks relatively flat over 2013, but that doesn't really tell the whole story. Jack, what can you tell us about what Airgas has been up to?
Well, Airgas has been one of the leading acquirers of companies for the past 20 years. They've really been on a roll. They've had over 400 acquisitions in the past years. And just in this year, they've had 9 acquisitions that have totaled $84 million in sales. Their goal is to have more than $100 million in sales from acquisitions this year, and we're assured that that's going to happen.
Number 8 company MRC Global jumped from $5.2 billion in 2013 to $5.9 billion in 2014. Net income was $144 million, which is the third best in company history. According to Chairman Andrew Lane, given the macro global energy outlook, MRC expects 2015 to be a challenging year. However, Lane said, "We feel like we have positioned the company to weather this cycle and be in an even stronger position when we emerge."
At number 7, Anixter had a busy 2014, jumping from $6.2 billion to $6.4 billion. According to the Anixter 2014 report, the announced OEM supply fastener sale will provide us with additional financial flexibility to grow and invest our industry-leading global platforms. It will also improve our investment profile as the resulting core business will have lower European exposure, less currency risk, less volatility, higher operating margins, and improved working capital. Moving into 2015, Anixter made news when it agreed to purchase HD Supply's Power Solutions segment for a price of $825 million.
At number 6, Wesco has evolved from an electrical distributor focused on the non-residential construction market to a diversified global wholesale distribution and supply chain management company, servicing the industrial, construction, utility, and institutional and government markets. Our products, says the company, global footprint, and service capabilities support the effective execution of our One Wesco strategy by providing comprehensive solutions to address our customers' supply chain needs. Wesco reported $7.9 billion in 2014 sales.
Our number 5 company is Sonpar NA, a distributor who is perhaps more well known for its presence in the electrical market before it began making some key acquisitions in MRO. The most recent was last fall when the company announced it acquired Industrial Distribution Group, number 22 on last year's list. And number 4, HD Supply posted $9 billion in revenue. For the full year, the company reported a sales increase of 8% over 2013 to $9 billion. HD Supply had full year net income of $3 million, compared to a net loss of $218 million in 2013. So far, 2015 has been busy. In January, HD Supply completed the sale of all its assets of its hardware solutions business to the Home Depot and received cash proceeds of an estimated $198 million.
Our number 3 company, W.W. Grainger, went from $9.4 to $10 billion in sales. Grainger has more than 2 million active customers and stocks more than 1.4 million products. Jack, Grainger is always an interesting story, especially as it relates to e-commerce. What can you tell us about Grainger?
Well, Grainger, of course, has become the leader in e-commerce and distribution. I think most people would agree with that. There's other companies that are coming along and increase their business sharply in that area, but Grainger continues to have about 40% of their sales come from e-commerce, and it's only going to grow more and more. They've invested a lot of money in e-commerce, they're hiring more people in e-commerce, and they're going to be very successful in the years ahead with its e-commerce platform.
Our number 2 company is Worth Group, the Germany-based distributor of assembly and fastening products with sales of $13.4 billion. Worth made news in 2015 when the company announced the acquisition of Frankfurt, New York-based Northern Safety and Industrial, one of the largest privately held safety companies in the U.S.
And finally, the number 1 company, and it should become as no surprise, is Reading, England-based Wolseley, who posted a gain of 8.6%. According to the company's 2014 annual report, after several years of reshaping its portfolio towards profitable growth, the heavy lifting is now largely completed, and the business today is on a much stronger footing. We are now focusing on our attractive businesses with strong market positions. Wolseley's final tally for 2014 was an astonishing $21.3 billion.
Well, that wraps up the 2014 list. On behalf of the industrial distribution staff, I'd like to congratulate those companies who have achieved these rankings and helped to drive a healthy industry. Keep an eye out for our September-October print issue, where you'll also find the rankings along with some additional supplemental information. Thanks for joining us.